For Tesla investors, the coming year may be a game changer as we begin the new year with a chance to take stock of the past and look forward to the future. This might be a historic moment for investors in the electric vehicle firm, according to a number of variables. A number of amazing elements come together to make this an incredibly exciting time for Tesla investors. Are you prepared to defy expectations and work together to eradicate the status quo in the Tesla investing industry? Meet Cathie Wood, CEO of ARK Invest Management LLC, who, despite market turbulence and doubters, is more bullish than ever about the electric car giant thanks to her unmatched experience and acumen. Cathie believes that for the next 5 years, the price of Tesla stock will soar by a factor of 5. Come along as we explore this fearless investor's thinking to see the motivations behind her steadfast faith in Tesla, from her recent buying binge to her ambitious forecasts. Before we go there, hit those like and subscribe buttons if you're interested in learning more about the future of the electric car business. Did you know that, even though it's only the 1st of February, Cathie Wood is more optimistic than ever about the top electric vehicle company, Tesla, despite the fact that many individuals have lost faith in the firm and its CEO Elon Musk and have sold their Tesla stock due to recent fluctuating performance based on ARK's daily statistics. Cathie Wood believes that there is a 5-fold growth in stock price for Tesla over the next 5 years, and she is more confident than ever about the company's future. During the first U.S. trading day of 2023, Cathie Wood, the CEO of ARK Invest Management LLC, purchased roughly 176,000 shares of Tesla. This has shown a renewed belief in the EV manufacturer at a time when many other investors have abandoned the business even in the face of generous incentives. Since October 3rd, when their most recent purchasing spree started, Tesla's stock price has dropped by 12 points due to the company's failure to meet quarterly delivery projections. According to ARK trading data compiled by Bloomberg, Wood's ETFs have acquired just over 938,000 shares of the electric vehicle manufacturer. It is widely known that 2022 was a challenging year for Tesla. The company aggressively discounted its products in the United States last month, offering a discount of $3,750 to consumers. However, this seemingly radical move from the market leader in EVs didn't pay off. One could argue that Tesla was discounting cars in the previous month to set refreshed tax credits that would be rolling out in 2023, but it was later discovered that the tax breaks won't apply to many of the automaker's offerings. Despite this, Tesla still let investors down by announcing lower than expected deliveries for the fourth quarter, following 3 consecutive quarters of deliveries for the automaker. Following the miss, several analysts cut their 12-month price projections for the stock, putting the average Wall Street forecast down to its lowest point since October 2021. Even if the market has increased by 4% since Elon Musk took over as Twitter CEO on October 27, the average target price still indicates that the stock will rise by much over 100% in the next 12 months. Since then, Tesla stock has declined dramatically. If you follow the stock chart all the way back to its peak in late 2021, you will see that shares have dropped by about 70%. While automakers had a difficult 2022, Tesla's vehicle deliveries saw a 40% increase in that year. Wood has been adding to her position in Tesla for the past few months, and she hasn't stopped adding even though the stock has reversed direction. Investors were disappointed by the fourth quarter's lower than expected deliveries, but the good news is that Tesla is still rapidly expanding its market share. In contrast, Tesla will continue to gain market share. The company has recently moved to aggressively decrease pricing, which has put pressure on other manufacturers to follow them and damage their competitors. ARK Investments CEO, who oversees the widely held Energy Select Sector Fund that follows the shares of energy businesses, recently remarked that the market was behaving irrationally. CEO of ARK Investments Cathie Wood said, "We are as bullish as we have ever been about Tesla, and as a result, ARK is still optimistic about the firm, projecting a 10-fold increase in value." This optimism stems from the assertion made by Wood that Tesla can double its addressable market by reducing the cost of an electric car. When asked about her thoughts on large companies competing with Tesla and electric vehicle production, Wood cited the Tesla autonomous taxi platform as an example of the kind of innovative change that was needed in the book In Harm's Way. According to Wood, unless they want to lose money on their cars, no other automaker will be able to compete with or surpass Tesla's combo. In a Yahoo Finance article from last year, our CEO Cathie Wood expressed her belief that gas-powered vehicles will become obsolete over the next 5 to 10 years, and the traditional auto industry must find a way to transition to electric vehicles. Wood believes that as buyers begin to switch from gas power to electric and consider the features of various cars, brand loyalty will diminish. In mid-October, an ARC executive expressed confidence about the leading electric vehicle manufacturer, Tesla, saying that the company had a lot of irons in the fire and that investors should think about whether now is a good time to buy. As a result, Tesla has risen to the top of this sector of the economy and is positioning itself to continue leading the electric vehicle market into a new age, even though financial returns in the years to come may not be as high as they have been in the past, explaining why ART is optimistic. About Tesla, Tasha Keeney, in addition, Wood stated in a separate interview with Yahoo Finance that she believes Tesla will transition to an autonomous taxi platform in 2024 to meet its goal of growing deliveries by 50% annually over several years, an objective Tesla warned it will fall short in 2022. Tesla will likely make compromises when it comes to gross margins, but I believe Elon is as focused as ever on that Tesla will continue to be the world's dominant seller of electric vehicles. Tesla is reportedly aware that electric vehicles only make up a small portion of auto sales at this point, so we should keep in mind that the sector is still developing. Bullish experts and investors are optimistic that the company will continue to lead the electric vehicle revolution, which has finally gained traction in the solar energy and battery storage industries. On the other hand, pessimistic experts and investors are concerned that the company won't live up to its potential and will only become another product outfit, rather than creating anything truly revolutionary. Some experts see tests as the company's delivery is expected to grow by 40% in 2023 to 1.8 million to 1.9 million vehicles from roughly 1.3 million in 2022. The companies that detractors view it as an expensive and vulnerable to competition in highly subsidized industries. In addition, Tesla's recent entry into the energy storage market is expected to be a significant growth driver for the company given the growing demand for renewable energy solutions and the push towards electrification. The energy storage market is predicted to be a multi-billion-dollar industry in the near future, and the company's ongoing efforts to reduce the cost of battery technology could lead to even more disruptive innovations. All of these factors combined make this an extremely exciting time for Tesla. First, the company has seen tremendous growth over the past few years, and this trend is expected to continue in the upcoming year. Furthermore, Tesla has made significant strides in expanding its production capacity, developing new technologies, and increasing its market share in the electric vehicle space. We hope that this movie shed light on finance and investing. Keep in mind that the success of the financial market depends on well-researched elections. Always seek advice from a financial counselor before making any investments. If you enjoyed this video, please hit the like and subscribe buttons. I'll see you in the next video. Cathie Wood and her investment firm, ARK Invest, are more optimistic than ever about Tesla shares.